Welcome to the Nebraska Soybean Board Weekly Market Roundup, being brought to you by Nebraska soybean farmers and their checkoff. I'm Susan Littlefield. Unfortunately, as we look back to the Friday trade, it was not a beautiful picture. There was a lot of hope and optimism when we started out the week's trade. We'll talk about what the downfall was, and there's a lot of factors that have been weighing into this market, whether we talk about the weather models that kind of ebbed and flowed and changed themselves a little bit throughout the trading week. But what about the whole macro picture of these markets? That's exactly where we're going to start out when we come back after this.
Meet the champions of innovation in the heart of Nebraska. They're not just farmers, and they nurture more than just crops, pushing boundaries and turning challenges into opportunities. They trade knowledge and know-how, and their dedication doesn't end at harvest. It's in your every bite and every drive. The future of food, fuel, and fiber, and the future of Nebraska starts right here.
Welcome back once again. As you can see, joining us, Shawn Hackett. Shawn is with Hackett Financial Advisors, and hopefully our other guest, having some technical internet issues, will be able to join us. But if not, Shawn, this whole show gets to be with you today. And I wanted to start out talking about this whole macro picture. What are you seeing in this marketplace that has set up the tone that we're into this week?
All year long, it's been the artificial intelligence stocks gaining all the cash flow. All the capital flows have been going in there. They've been borrowing money in cheap yen, meaning that the yen interest rate's very low, so they borrow money in the yen. They buy AI stocks. They were buying precious metals. They were buying crude oil. And then all of a sudden, about a week and a half ago, that trend reversed. We saw the yen take off, and you quickly have to unwind these paired trades. And so the AI stocks crashed, the precious metal stocks, the copper market crashed, and crude oil crashed, which were the recipients of this yen, they call it the yen carry trade. And of course, that set off a cascade selling in all commodities, whether it was grains, whether it was softs, precious metals, everything sort of took it on the chin. And the Goldman Sachs Commodity Index, really, really got hit over the last week. That did not help sentiment in the grains. On top of that, we have a situation with our politics where, we just really don't know at all what is going to be looking like in terms of who has the best chance to win the presidency. Kamala would certainly keep the policies that we've had going, which is probably more favorable for agricultural prices, keeping the green energy going, keeping ethanol going, keeping renewable diesel going, those kinds of things. Whereas Trump wants to do trade wars and tariffs, and we know all about what that was like when he was president the last time. And so, when everyone's uncertain and we don't know which direction things are going to go, what do you do as a person? You take some chips off the table. And I think that's where it's at. And of course, we had some weather modeling, as you were talking about, at the end of the week that pushed some of this hot, dry weather a little more westerly, keeping it out of the main grain belt. And that also just did not help.
That whole weather situation, I mean, some called it a weather scare because we really haven't had to deal with this vast late amount of hot weather for such an extended time. And now they're looking 11 and 14 days out as to what this could see. Obviously, good pod filling stage going on right now. From a livestock side point, cattle in the feedlots have not had to deal with more than maybe 2 or 3 days of upper 90s. So how does the market take in all that information right now?
Well, I just think that right now the market feels that we've had enough moisture, that there's enough subsoil moisture. So long as that heat and dryness does not migrate more to the center of the country, what I mean by that is Iowa, Illinois, they believe we're going to have a trend line to above trend line yield crop. And there were thoughts earlier in the week that it might be a little more center based. And then the models just pushed it back west. And that's, it's really the key. I mean, we know it's too late for corn to really hurt the corn crop too much, but we know we could still hurt the soybean crop more. And I think like the canola price really got hit today because, canola competes with soybeans, competes with canola oil, but, soybean oil. If we're going to have a trend line to above trend line soybean crop, then the canola is going to have to compete with a lot of soybeans. So it's just a confluence of events that came together to create the perfect liquidation storm. We didn't quite make it back down to the lows we were at, Susan, a week and a half ago, but we might be heading there. we might be heading there.
We had a wheat tour that took place in the Dakotas, which showed some really nice and maybe surprising spring wheat numbers coming for them.
Yeah, look, winter wheat crop was bigger than we thought. The spring wheat crop is bigger than we thought. And even though the Canadian prairie spring wheat crop looks like it's going to come down from what we thought because of the hot, dry weather, the 100-degree temps they've been getting, overall, North American wheat supply is the best it's been, Susan. And gosh, it's got to be 5 or 6 years the last time we saw supply or production this good. Now, of course, Russia, Ukraine is down 15% year over year. French and EU wheat production down 15% year over year. So everyone else, those are your two largest exporters in the world, they're way down, but we still are dealing with indigestion of trying to put this crop away domestically. And obviously the wheat price as of yet has not found that, what we call that price clearing level to do that. We will soon, but we still haven't done it. And obviously the spring wheat yields being better than expected threw some cold water on any hope that we were going to do that just quite yet.
Part of the reason we saw that 4-year drop in the wheat complex for a Friday trade, or were there other
Yeah.
influences weighing in?
Well, I mean, I think, some of the other influences on wheat is that some of the analysts are improving their wheat production outlook for Russia, Ukraine just by a little bit, not a lot, but just by a little bit. We're also seeing the potential for a little bit of rain to come into Russia, just a little bit, that helps the corn. But remember, when we're dealing with a market that's hyper bearish, they don't need a lot to get themselves right back on board with trading the bearish story. So once again, in a week where we had macro down, weather turning a little less severe here in the U.S., and some less daunting Russia-Ukraine news, everyone just said, hey, here comes the weekend. We'll worry about it on Monday.
So is there, or what are you seeing risk for folks that are holding on to old crop grain at this point? The bins still have it in there and they're holding, waiting for that opportunity to sell, or maybe waiting closer to harvest, thinking of a disaster that might work in.
Historically, you don't typically get too much of a bounce if the crop is looking good between now and September. That's what the seasonal pattern is. It's usually down into the harvest lows in September. Sometimes you can make an early harvest low. Sometimes you can make a late harvest low. We had a little bounce. It looks like we're giving it back. The problem I have right now is is if the farmers really start to sell, who have to, I'm worried about the cash basis widening out, Susan. The cash widens out, and even though, let's say, the futures are flat, you actually lose it on the cash price widening out because there's too much physical grain coming in and not enough people wanting to buy it. I feel if you're in a position that you say, hey, I'm way behind, I didn't take advantage of the spring opportunity to sell, I think you're running out of runway here, Susan. I'm a very prayerful person. I do believe in hoping and keeping the faith and praying for the best. But when you got a short window, I think you got to move the grain and because it might just get a little worse the next 30 days if you're not careful. And what you're not trying to do, you want to try to not make it the worst case scenario possible. And selling at harvest oftentimes can be the worst possible scenario. I think I'd move some grain if I'm really way behind.
You made a comment before we even started this program talking about maybe now's not the time to be maximizing that income on your farm.
I really feel I feel very similarly to where we were in 2020, July, August. Relative value prices, that is the price of corn relative to all commodities, the price of soybeans, the price of wheat relative to all commodities. When you look at that ratio, we are trading at some of the cheapest levels we've traded at in the last 20 to 25 years. When you look at the price chart, when we've gotten to those cheap levels on a 6-month, 12-month, 18-month basis, it has historically been the worst time for farmers to cash sell their crops. And what I said back then, and I will say today, unless you absolutely positively have to sell, I understand if you have to sell, you got to keep the farm going. I understand that. But unless you absolutely positively have to sell, or you don't have storage for all your grain, I wouldn't sell any more than I absolutely positively have to, and I would store the rest. That's the recommendation I make back in 2020, which was a very good one, and that's the recommendation that I would make today.
Is the writing on the wall? Are we not fully paying attention to the state of the income of agriculture right now when we see organizations like John Deere, once again this week making drastic cuts to their employees, and this time it's the salaried employees.
Well, look, the ag economy is definitely looking at a dramatic decline in cash flow, in net farm income. Everyone's tightening the belt. Farm equipment, used equipment is staying at a standstill. Look at seed dealers, fertilizer, and it's not just here in the U.S. I mean, the same thing is going on in Brazil. How farmers are going under. They're hoping the government can help keep them alive. I mean, we're at a situation where production is not going to stabilize. I mean, it's not going to hold up here if these prices were to persist for too long. And that's, they always say the best thing for low prices is low price. I know it's a terrible statement and everybody gets tired of hearing about it, but it's these negative economic forces that really allow for, better fundamentals out ahead. And so that is unfortunately the outcome of a bottom. Is a lot of people in the short run do have to tighten the belt, and it's a painful period. We went through this in the dairy sector not too long ago. We went through this in the hog sector not too long ago, and we went through this in the cattle market not too long ago, where they went through belt tightening. And at least for dairy and at least for cattle, they are seeing a price renaissance because those poor economics have improved the fundamentals. So there is a white light on the other side of this valley of the shadow of death. We're just not there yet, and it's really a scary time, and I understand that.
All right, you brought up dairy. I was going to ask you about that before we wrapped up. Let's take a look at the dairy market, and then obviously the cattle market as well.
Well, the way I look at the dairy market is this. We have the avian flu. We still have it spreading. It's still not gone. Production's still being hit. And where to look, we saw a big reduction in cheese stocks in storage here in the last month reporting. And I mean, this situation is going to get it almost reminds me of cattle, where we're just going to have, even though demand is not very good, Susan, like end user demand for milk and dairy is not great here in the U.S., the supply constriction, especially later in the year, when we get seasonal improvement in demand, I think the dairy market's going to be very, very well supported here. And it could even head higher. Normally, milk prices would fall when we have weak demand, but in this unusual circumstance, I really feel that the U.S. is in a really an unprecedented situation, and I like the outlook for better prices ahead. And I could say the same thing for the cattle market. Demand not great, supply still tight, going to get exceedingly tighter later in the year. We have a kind of a triangular basing pattern that we've been developing in cattle since last fall. And actually, the October fat cattle market this week broke up above the neckline for the first time. If we get any follow through, Susan, next week, that's a breakout on the chart. That means that we might be ready to break out of this impasse we've been in, and maybe the cattle price has another leg up to go here to better reflect what's going to be a very, very tight situation. So while the grains are a little dystopian right now, the livestock sectors actually look, and oftentimes they do move in different, at different times. The outlook for livestock actually looks fairly good right now, from what I can see, that producers are getting better prices, and they may see even better prices later on in the year.
All right, great conversation this week, Shawn. Thanks for joining us.
Thanks, Susan. It's always a blast. Always appreciate you reaching out and being on your show.
Well, thanks so much. Shawn Hackett joining us this week. Quick reminder, commodity futures and options do involve a substantial risk of loss, not suitable to all investors. And that's been the Nebraska Soybean Board Weekly Market Roundup.